Thank you very much for inviting me to speak to this conference today. I should say one disclaimer. I spent last year as the Energy Commissioner's Special Advisor in Europe and also chairing the 250 Roadmap. And as you'll see, my views about many of the European things are highly critical, so my remarks are entirely personal and in no way related to Commission views. I thought one way of contextualizing what I want to say about the new gas world and some of the implications is to do something which possibly few of you in your working lives do, which is to ask you to imagine what it would be like if you were to find yourself in some ancient university like mine in 2050, and your task was to write the history of the oil and gas industries, the global oil and gas industries, at around this time. And the reason that exercise is helpful is it helps you to pick out the wheat from the chaff. Which things are really important that are going on at the moment, as opposed to which bits are just the normal day-to-day business of the oil and gas industries. And our historian would, of course, note the great economic recession. Our historian would also notice, and it's important to bear this in mind, that around this time we were going to cross 400 parts per million of CO2 in the atmosphere, and they would note the climate change implications. They would note the process towards destroying about half the species on the planet. By 2050, we'll be halfway through that process by 2100. So they'll note the big environmental impacts, they'll note the huge recession. But they'll also turn their gaze to the oil and gas sector. After all, it's the fossil fuels that have developed modern capitalism and the modern industrial lifestyle that many people enjoy. They may note that as near as 2 decades ago, in 1990-ish, it was illegal to burn gas in power stations in Europe. It was too special a premium fuel, and people thought it ought to be reserved for the petrochemical industry. They'll observe that gas was never dreamt of as being seriously fungible with oil, not a serious substitute for oil, no vision through to electricity, taking over electrification of cars and all those kinds of things, and indeed the direct gas to liquids which are now possible in the United States. They'll see the gas industry as overwhelmingly regional and overwhelmingly pipeline-driven. And of course, they'll notice, if they go back to the 1990s through to especially the last decade we've been through, all that mumbo-jumbo and nonsense about peak oil and about the fact that many sensible people apparently thought the oil price was going to 200, that we were running out imminently, and that fossil fuels were not really a problem for global warming because, of course, they were going to be so scarce and so expensive that all those windmills and solar panels were all going to be economic in their own right and would not need any further support. And that Europe in particular posed as the area of the world which was going to pioneer the renewables' new industrial revolution, and this was going to effectively replace oil and gas within a matter of 1 or 2 decades. They'll notice the folly of that and the extent to which the problem from a climate change and environmental point of view is that we have far too many fossil fuels rather than too little. And indeed, in the case of gas, for policy purposes, certainly in the United States, but elsewhere, my guess is it's better to assume that we have infinite supplies of gas than they're about to instantly run out. The abundance is quite remarkable. So our historian will notice a switch from a conventional wisdom that has been dominant in the oil and gas markets over the last decade or so to the new world which has opened up in front of us. And the way I'd like to go about addressing some of the issues within that new world is to think through a series of questions which my historian in the future will look back at and look for answers. So the first question is obvious. How revolutionary is it? Is it really a game changer that three technologies, fracking, seismic technologies, and horizontal drilling, happen to just come together to open up a major new resource. And not only will a historian look at shale gas, but the other unconventionals, the superabundance of coal bed methane in particular, which may make Australia a bigger LNG exporter by 2020 from coal bed methane than Qatar from natural gas in its normal form. They will almost certainly, the historian, be interested in the question of what happened to US security of supply. Remember, the US is still about 23% of world GDP, and in particular, how it changed the geopolitics of the United States and indeed world relations, and how probably it led to the gradual withdrawal of the US, both in economic interest and in hardware, from the Gulf and the Middle Eastern states. They'll look at Europe's dithering about shale gas, and I'll come to that, and the attempt to ban anything that might interfere with France's nuclear power stations or Germany's windmills. And they will, in particular, very heavily focus on just how big the impact of gas will by 2050 have been in decarbonisation, which is the real silver lining of that. And of course, for many of you, the coming of abundant unconventional resources changes the game for NOx and also IOCs. From a world of more and more concentrated resources in fewer and fewer hands, and the obvious and indeed very sensible policy of nationalising those resources, to a world where hydrocarbons are widely distributed, and in particularly widely distributed outside the OPEC area. So that's my kind of set of questions, and I'm going to sketch a few quick answers to some of those in the time I have available. So let's start with how revolutionary. Well, who cares whether something's a revolution or not? The really interesting thing is, did it turn out to be very different from what people reasonably expected? And don't worry about the detail of this graph, it's almost certainly going to be wrong. Very few agencies like the EIA, or particularly the IEA, ever backcast, so you never get them to look backwards and say, how badly did our forecast perform in the past? If that was the IEA, it would be extremely embarrassing, and we'd all take a lot more scepticism about these forecasts. But the real point here is that shale gas did not figure at all in 2000. That's not very long ago in an investment cycle, in US thinking. It was not on the table. And yet, within a decade, you're looking towards maybe 50% of total gas projections, the projection coming from that fuel source. Think how fast a change that is compared with what people anticipated. It's almost as fast a change from the days in 1999 when The Economist wrote on the front page, $5 oil question mark, how will the oil companies survive? To a world 10 years later when you're talking about $147 oil. The uncertainties in these worlds are great, and this is a major change from any reasonable expectation. What we've discovered, or what has actually not been discovered, but what has become accessible, is enormous resources of shale gas, or shale rocks, easily accessible in the United States, and the technologies have come along to exploit those, and of course, on a global level, and this is just the start, the recognition that the rocks in which you find shale gas and other unconventionals are the commonest rocks on the planet apart from our volcanic friends. The Earth's crust is absolutely coated in rocks which are shale in character. They are the most common. And almost all shale rocks somewhere have some forms of carbon or methane deposits within them. Almost all of them inaccessible, almost all of them uneconomic. But the thing about the shale story, which is different from the conventional oil and gas story, is that they're all over the place. And interestingly, they're in places where people previously had been highly dependent on fossil fuel imports. So this is only a study of 14 areas. You see Russia's just a blank. You can't even see the Arctic on this diagram. You can't see whole chunks of the African continent. You can't see the whole areas off Mozambique with red dots on them yet. But we already know that the US, Argentina, and China have enormous potential deposits. And Russia's probably got so much shale gas, wouldn't know where to start on extracting that, but it's got lots of other natural resources too. The point of this is the wide geographical dispersion of resources and the sheer scale. We are not going to run out of gas anytime soon, and if you map onto this shale oil, we're not going to run out of shale oil anytime soon. We've got tons and tons of coal left. We've got plenty of fossil fuels to fry the planet several times over. The problem is not, unfortunately, scarcity, because if it was scarce and the prices were going to be high, then people would develop non-carbon fuels much more quickly, and then we might address the carbon problem. The alternative is the case. And the real question in carbon policy is which carbon fuels are worst from an environmental point of view, and which ones are better. And I'll come to this later in my talk, but that is the key climate change issue. Instead of talking about going straight from fossil fuels to windmills, goodness knows what question windmills are an answer to, but never mind, apart from subsidies for those companies lucky enough to be able to inhabit the North Sea off Germany and the UK. Apart from that, but the crucial issue is these things are never going to be economic against the fossil fuels that we have available for a very long time. And that contextualizes our problem, and that is completely different from the assessment that most European politicians have and almost every green NGO. They will tell you, indeed the Secretary of State here in Britain is determined that we must further subsidise particular technologies because we won't need to do it for very long, because by the mid-2020s the gas price will be so high and so volatile that he will be thanked for protecting the customers from that exposure to those fossil fuel prices. You couldn't make it up. And when I pointed out that he would at least be congratulated by the grateful British public if and when the gas price falls, he'll at least be able to be thanked by the public because they'll be able to say to him, thank you, Secretary of State, for protecting us from the volatility of gas prices. We're very grateful we never benefited from any falls. You couldn't make it up. So these deposits are very widespread. We're only beginning to discover what's there, and they're on a very large scale. Of course, I must stress, most of them are uneconomic, most of them are never going to be economic, but the distribution of these resources is very large. And that's before we come to other unconventionals. Never mind our historian in 2050. If someone had come along to me a few years ago and said, do you know, it's going to be the case that it's going to be possible to liquefy coal bed methane in Australia, ship it to China at economic prices, at competitive prices, I would have thought someone was either got far too money and no idea what to spend it on, or pulling my leg. Okay? That would have been a pretty inconceivable idea. It would have been as inconceivable as someone saying to me in 2003, do you know the British government might nationalise most of its banks? Okay? That's how the world changes on its head. Australia is an enormous resource in its own right. And just let the idea sink in. The idea that coal bed methane could be so abundant that you could liquefy a sufficient amount of it by 2020 to produce more LNG exports than Qatar. That is a very radical idea and shows how the landscape of these areas change. Now, it may not turn out that way. Prices may not deliver it. The Great Recession in Europe and the US may continue. By the way, they are 50% of world GDP between them, so it does kind of matter what happens there. All sorts of environmental objections may be brought forward, but the resource base for these other unconventionals is large. And then there's shale oil. I suspect if we were here in 3 or 4 years' time, we wouldn't have a session on shale gas. We'd be talking mainly about shale oil. and what's available, and the ability of the shale technology to switch rigs between oil and gas. It's a small-scale capex. In the gas case, you can work out your drilling regime and your capex program on a 6-month forecast of future gas prices. This is a completely different kind of capital-structured industry to the conventional oil and gas one. Then there are tar sands and all the issues that go with those, and all sorts of new energy frontiers for supplies. A quarter of the world's oil and gas, in conventional terms, may be under the Arctic. If you turn the map of the world upside down, as the Norwegian foreign minister once got me to do, and you look from the Arctic down, imagine all the ice gone, that's maybe only 20 years' time, and you look how shallow the North Sea, the Arctic Sea is. Half of it is extremely shallow, and that half is almost entirely Russian. The resource potential there is enormous. Iceland will probably be the Gibraltar of the North, as Gibraltar is the Mediterranean. It's the obvious point going through. And my historian might notice they went bankrupt in Iceland, but it was a temporary affair before things got really quite rosy if you're located in that particular spot. So the supplies here are large-scale too. Okay. Now, so what? So there are large supplies. People have been going on about running out of oil and gas for decades. Indeed, Jevons, the famous British economist in the middle of the 19th century, wrote a book called The Coal Question, which is all about peak coal and how Britain was going to run out of coal by the turn of the century, that's 19th to 20th century, and indeed Britain would shrink to its former smallness as a result. So predicting Armageddon in the oil markets and the end of reserves is something that's been going on, which historians have been able to write about for at least 150 years. And not all this supply is going to come on very quickly. It's going to take time. It's going to be slow. It's going to be gradual. It's not revolutionary in the speed at which it's delivered. It's revolutionary in the sense of changing, flipping the world from one conventional wisdom to another. And it's very dangerous to flip all the way to the other and just assume superabundance. But nevertheless, there are really massive effects already being felt, both in oil and gas. In the conventional oil world, the United States has the fastest rising oil production in the world. Last year it added more conventional oil output than the entirety of the Libyan lost production. And there's no sign that the increase in US conventional oil production is going to slow down. But its demand for oil is falling at the same time as its production is going up, as is the demand for oil in Europe. Price works. It did at the end of the 1970s. If you drive the price high enough, you'll get many more energy efficiency projects which are now economic, and of course energy efficiency changes tend to be permanent. You'll get more E&P. You'll get people driving smaller SUVs. In fact, in the US, there's been a big switch from SUVs to more conventional cars. You'll get all sorts of substitution effects which come from prices, and that's shown in falling oil prices. Indeed, in this country, the number of vehicles on the roads are actually falling, which shows the effect of the economic crisis too, part of which has been caused by the oil price shock, which has been administered in the last few years. And the shale gas production is, of course, going up. What this means is that the United States is beginning to substitute both oil and gas imports, and the resources that used to go to the United States, particularly from Canada, are now having to find new markets, particularly to the west. So just think about in conventional terms what's going on. Look at your US oil imports. So it now imports less than half its oil consumption. I'm just talking about oil for the moment. Gas is just taking itself out of the market. All those projections for all that Qatari gas, all that LNG from Russia, from North Norway, Statoil, all these companies that were going to build LNG facilities to send gas to the United States. I'm working on a project to export gas from the United States from an LNG plant. I couldn't have imagined that several years ago. That's happened. That's dramatic. That's a withdrawal from a market of an economy which is nearly 25% of world GDP. But on the oil side, you might think, oh, well, you know, not so. Well, think where US gets its oil imports from. 25% come from Canada. More come from Canada than from Africa or the Middle East. 50% come from the Americas, including Canada, and nearly 25% comes from Africa. The fact already is the United States is withdrawing from the Middle East as a source of its oil supplies. And if you roll this game forward, when President Nixon, and indeed all his successors, stated that their policy objective in the United States was national energy independence, although pure independence is nonsense. It's the only time you'd ever think about that is during a war. And of course there'll be imports and exports. If you roll the dice forward to 220, whoever is the American president after the next one, so it certainly won't be Obama because he could only do two terms if he's elected, whoever's president in 220 will look at an economy which is basically, in large measure, energy independent. And to put that in its context, and I think it's very important to recognise this, the world we understand for fossil fuels is one where the Middle East and OPEC are absolutely pivotal, and the American fleet and its military force have always been circulating around the Middle East and protecting oil interests in one form or another. And you know, the United States is overwhelmingly dominant when we talk about military force around the world. When you think a small country like this has the fourth largest, this is Britain, the fourth largest armed forces in the world, you get a picture of how big the relative size of the United States is to virtually everybody else. And if the US is not taking oil from the Middle East in any large measure whatsoever, and if there is further turmoil in the Middle East, I think, for example, of a Saudi destabilization, which has always been the great fear of the Western oil-consuming countries about the Middle East. From a purely national self-interest point of view, if this happens in 10 years' time, it's not clear what the American interest will be. I sometimes flippantly make the remark that the Americans' main interest in 220, and this is what our historian might see, might be 7 million Israelis. By the way, they've just discovered some gas as well, just as an aside, another new discovery. And the cheap feedstock of gas to the United States is changing geopolitics too, because what we're observing in the United States is a gradual reindustrialization. So those great competitive forces and that great commodity and oil demand which shaped the last 15 or 20 years, which is the story of China and that phenomenal economic growth, it's doubled twice since 1990 in size. That's based on essentially energy-intensive industries exporting to the United States and Europe. Just like, roll back another decade earlier, Japan used to export to the United States and Europe. China has a savings ratio of 50%. Japan had a savings ratio of 30%. So not only did they export these, in the Chinese case, energy-intensive industries, but they lent them the money to pay for it from the surplus from the Chinese savers. And of course, that's why the Chinese own all these treasury bills in the United States, and the Americans can say, not our problem if we print the money. That's an aside. But the important point here is that competitive advantage in China is significantly eroded. It was based on plentiful, cheap rural labour piling in to the coastal area and then on abundant energy, including coal. Actually, what shale gas has done is suggested that the availability of a long-term cheap industrial feedstock in the United States, plus the fact that labour costs have been rising in China, means that the location of choice for energy-intensive industries is no longer obviously the Far East. This will have major implications for the structure of future demand, and I note that China's electricity demand in the first 3 months of this year didn't grow, and I note that the docks are full of coal stocks. It's not such a necessarily obvious story that China will simply go on growing at 7% per annum for the next 2, 3, 4 decades, etc. it might turn out very differently as it did for Japan. If you're in the oil and gas business, this tells you prices are going south, not north, and that's an important component. But again, from the United States point of view, it's not then so exposed and trade dependent, and these relationships with countries like China, and again, the shale story changes the geopolitics. Now, if we come to little old Europe, it's that little area on the globe which has this sort of currency crisis and a few little riots and problems and no growth. If we look at shale gas in Europe, let me just shoot forward one. It's obvious that there's going to be a hell of a lot of it, in principle. Why? Because we have all the rock structures which have produced conventional fossil fuels, in large measure. And where you've got conventional fossil fuels, you've almost certainly got much more shale deposits under it. So there's a hell of a lot of it over the North European plain, through the North Sea, and that just happens to coincide with the North European plain's oil, gas, and coal through to the North Sea. So the resource base is large, but it's going to take a much longer time. Why? Well, first of all, it really does matter who owns the property rights. Okay? So in the United States, I'm sure it's obvious to you, but to us Europeans it's very odd that you own everything underneath the bit of property you own on the surface. Indeed, that's why, if you look back to the Pennsylvanian period at the beginning of the oil industry and the end of the 19th century in America, why did they produce the oil so quick? Well, because you could drill down from your piece of ground and steal everything horizontally you possibly could, and if you didn't, someone else would do it to you. So you really do want to get the stuff out. America's property rights system is one designed to extract the resources as fast as possible. The Europeans have a world in which what's underneath you in hydrocarbon terms belongs to the state, not yourself. And now your incentives are very different. And that's radically different in terms of the way shale gas goes forward and other shale deposits. But we also have deep vested interests in Europe. So we have France, which took a bet at the end of the 1970s that peak oil really was true, that oil prices were going to go up and up from 1979 onwards, and built itself 59 nuclear reactors to deal with that problem. In one case, six in 1 year, and now it's 80% nuclear based. It wants to be the base of future nuclear development in a number of different countries, and shale gas wipes out the economics of nuclear power. It's deadly, because you can build a gas CCGT quickly, the fuel is cheap, and compared with the very high sunk capital costs of a nuclear power station, which takes 5 years to build, there's no contest. That's why the nuclear program has stopped in the United States. It's got nothing to do with Fukushima. In the mid-2000s, there were 24 reactors being brought forward in the United States. Now there's less than 2. Why? Gas. That is the explanation of that. So for France, this is a pretty big threat. So my French friends have adopted what I call the Japanese whaling approach to shale gas. What you do is you say, we'll ban it except for scientific purposes. And good friends I've got in the gas industry in Europe tell me that the consequence for scientific purposes will be, as with the Japanese harvesting of whales, we'll see quite a lot of shale gas coming out of France too. The renewables, of course, are deeply threatened. If you're Germany and you decide instantaneously to shut down 8 of your zero fossil or almost zero fossil fuel power stations instantly and close all the rest of your nuclear industry by 2022 or 2003 and decide instead that you're going to bank on windmills, you've made a huge bet on where you think the oil and gas price is going from an industrial competitive point of view. And if it goes south, you've got a really serious difficulty with that world. Now, the Germans are schizophrenic about this. They are, of course, the greenest country on earth, with a powerful Green Party dedicated to addressing climate change. That's why they're just opening 2 stonking great large lignite coal power stations, about the dirtiest form of pollution known to mankind. You couldn't make it up. So in Europe, having signed up to the 2020 programme, Barroso having said he's on the cusp of the new industrial revolution in renewables, this is current renewables, not future renewables. Future renewables, Different story entirely. Enormous potential, which will also cap the oil and gas prices going forward. The current renewables, rooftop solar, or echo bling as my friends call it, and windmills, that is hugely dependent for its economic case on the assumption of rising prices. And you still find around Europe people who don't probably know how to spell the word shale gas, but certainly think it probably is never going to happen. Well, in Europe, slow, not so slow in Poland, but it's still there. So this brings me to my last component of what I wanted to pick up from these themes, which is where gas fits into climate change and decarbonisation. And forgive me if I'm a little sharp on this subject. I've literally just finished my book I've been writing called The Carbon Crunch, which will come out in October. There's a commercial for it, in which I've been looking at the question of why it is that since 1990 and the start of the UNFCCC program and Kyoto, etc., nothing at all has been achieved in climate change. How could so much political effort, so much money be spent and make not a slightest dent on the growth of emissions in global terms? When the agreements were started off in 1990, emissions were going up at 2 parts per million per annum. They're now going up at 3. And in my book I explain, and obviously I haven't got the time this morning, as to why, in fact, Kyoto made things worse. But the reality is we've achieved nothing whatsoever. And the reality behind that is, where have the emissions come from? It's about coal, 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 and coal again. If you look at the increased coal burn, which is overwhelmingly driven by China, to produce goods and services for the West to consume, which they would have produced themselves previously. So this isn't China's fault. This is carbon consumption in Europe and the US that's driving this framework. It's that coal which lies behind the enormous emissions growth. And coal is really filthy stuff from an environmental point of view. You know, where do you start? I mean, people talk about methane leakage from shale. It's true, it should be regulated. But compared with opening a coal mine, compared with the heavy metals, compared with the leaching into the water table, compared with the damage done to the health of everyone who works in a coal power station, 5,000 dead a year in China. Never mind the fact that everyone who goes down a coal mine has their health reduced. Compare that with shale or nuclear, you'd think you're on a different risk planet. Now, gas has half the emissions of coal. Crucial. And it doesn't have the SOx and the NOx. It doesn't have the widespread health effects. And it's fantastically cheaper in most places around the world now as for new electricity power stations. And electricity is by far the growing way in which we wish to consume final fuel. As a consequence, if you ask Europeans the following question, particularly European politicians, I guarantee you that no single leader in Europe will get this question right. If you say, which country has the fastest falling emissions of CO2 in the world? And the answer is the United States. No Kyoto policy, no windmill policy, no rooftop solar policy. United States emissions fell by 1.7% last year, where Europe's, even mired in the recession we're in, went up by between 1 and 2%. Okay? Why is this happening in the United States? The coal burn is plummeting, the gas burn is rocketing. It's a straightforward coal to gas switch. And if you want a way of reducing emissions quickly around the world, buying yourself some time, getting off this carbon escalator to 400, then gas has a phenomenal advantage vis-à-vis coal. And that is the story of decarbonisation, and that is its transitionary role. Compare that with Kyoto. What does Kyoto do? It sets carbon production targets for the Europeans. And I say the word carbon production because what it does is it looks at the emissions coming out of the factories, the power stations, and the industrial processes within the European countries. So you take a country like Britain. This is a fantastic place from a Kyoto point of view. Between 1990 and 2005, our emissions fell by 15%. Staggering. I recalculated the numbers to add back the stuff that we used to make here, like steel, cars, aluminium, cement, but we now import from China, the Far East and elsewhere. Between 1990 and 2005, I have to tell you that carbon consumption in Britain, which is the only way of measuring your carbon footprint and the way in which you measure your impact on those parts per million going up in the world, went up by 19%. That's why Kyoto failed. It positively incentivizes you to import your energy-intensive goods from elsewhere. Because, of course, by forcing you into a particular decarbonisation process, backed up by the Renewables Directive, you raise your energy price even higher and you just encourage the substitution. So Europe has been making, globally, climate change markedly worse, while the Kyoto numbers make it look like the puppet boys of the world. United States, none of this stuff, but it's doing the substitution and effectively. Remember, the United States doesn't trade very much. Its imports are only about 14% of GDP, so the effects on trade are different there. So let me bring me to my final slide, or penultimate slide. What does all this mean for the corporate structure? And I've talked in the big picture today, but I'm as interested in corporate structures and how companies respond to the challenges that are there. If you look at the relationship that's developed between NOx and IOCs, we've been through a process, in my view, perfectly rational and understandable and sensible, whereby most fossil fuel producers have decided that they will own and control their own natural resources. We've had widespread nationalisation. This is a process that's been going on for a long period of time, and now more than 90% of all oil and gas is in the hands, until we get to shale, is in the hands of national oil companies. And IOCs have had to try to work out their way around it, BP in Russia, trying to do partnerships, minor players, and we've seen the growth of the oil services sector to essentially take the place of the IOCs in servicing the NOx. But this is based on one primary assumption, which is the NOC's countries control the world's oil and gas resources, that tight grip is there and going to intensify, particularly in the Middle East. Shale changes all of that, as do the unconventionals. There are now many reserves which are not going to be in the core NOC-based economies. And the ability of the NOCs to develop into unconventional technologies means they need to have access to the technologies to do that. We've seen it in deep sea technology, but the shale and unconventionals bring that to the picture. This opens up new opportunities for IOCs and also new opportunities for NOCs. And my view is that that relationship is going to take time, but the smart companies will observe the world is different, they need a different business model, and they'll need to adapt to that framework. So into this new world, I used the word revolutionary at the beginning. Of course, our historian in 2050 will see it as a revolution, because a 2 years here or 2 years there doesn't really make much difference. It's a pretty discrete change looking from 250. But when you're in it, it's going to be gradual. And it'll take the Europeans a long time to realise what its form is. But gas will be a much bigger fuel. Gone are those days when it's a premium fuel illegal to burn in power stations. Gas will take more and more market share. It will be much more fungible with oil. It will be a prime source for electricity generation, and electricity will cut into the transport market and begin to cut out indirectly oil. And my own view is, you may think I'm completely mad, but my guess is far from running out of oil, in the end we'll probably leave quite a lot of it in the ground. The gas will fill quite a lot of that frame. Not for some time, very gradual. But the one thing that is very apparent, and I think my historian will support me on this, there's virtually no biological chance I'll be alive to check it, and probably most of you won't too, so I can make this prediction and the safe knowledge that you will not be able to contradict me later, is that the peak oil, peak gas stuff is just nonsense. And the sooner we wake up to that, the sooner we get a climate change policy which focuses on getting out of coal as fast as possible, using gas as a transition, and instead of spending all that money on those windmills and solar panels, if we just spent it on the next generation of renewables technologies and R&D, we might actually crack the problem. Thank you very much indeed.
Thank you very much. I hope you'll have time for
yes,
a couple of questions. I'll take the chairman's role. I was very intrigued by your point about U.S. energy self-sufficiency reducing its role over time in the Middle East. I just disagree. I mean, I think you're attributing too much rationality and underestimating the national security state with its intellectual apparatus, military-industrial complex. The fact that it doesn't cost American lives anymore, now that there are drones. We have, one guy put some stuff in his underwear, flew to America, and now we have drones over Yemen with a president who's the most liberal president we're likely to see, in our lifetimes.
I agree with you that these things are very slow, and there's momentum, and there's vested interest. But if you look at how empires changed historically, ultimately, there are those people who think that empires are driven by ideals and ideas about how the world should be run. And those people may believe in democracy, freedom, and liberty, in which case they couldn't support a single government in the Middle East. And that's part of American culture. Or they're driven by the need to find places to use their weapons to support their military industry. Or they're driven by deep national interest. And I think, whereas I put it very sharply because I only had a short period of time and I wanted to provoke people to think about these issues, I think it would be very hard to hold the alternative hypothesis that if the US depends less on Middle East oil, that won't have any effect at all on its attitude if and when difficult situations develop. I'm not sure that they would invade Iraq again, and I'm not at all sure that if the Saudi regime, which has many characteristics which are disliked by a liberal opinion in America, was to find itself threatened by democracy and an Arab Spring, etc., that the American support would be quite so overwhelming as you would imagine it would have been in 1960. So you don't have to buy my argument in its entirety to buy a subsection of it, which is the degree of importance will decline. Now, the corollary of what I didn't say was, that doesn't mean that the Middle East won't be important. It's just that its customers will be elsewhere. Okay, so just as you might think the United States' interest might get less, if the Chinese economic growth was to continue, which I'm very dubious about, but if it was, then you can imagine the Chinese having deep, deep geopolitical interests in the Middle East. And it's not at all clear how far the Americans would want to face that off. But that's a whole subject. But I still think to dismiss the idea that national economic interest has little to do with the longer run evolution of foreign policy is wrong. But we can reasonably disagree.
Very good. Now, questions. I suggest maybe questions for Professor Helm first, because he's got to rush out to give another speech on another subject.
Nuclear power.
Any more questions from the floor? I think there's a microphone. We'll be wandering around. Please state your name and affiliation.
Cécile Tibiran-Bal from GDF Suez. I had a question because the US, you're mentioning that they might export gas, but for the moment there's a law that you cannot export any energy. And the second question, the shale oil that you're getting from the States is light oil, so that's also shifting the balance. And the refiners that have invested in like very high complexity techniques to get rid of the to be able to process heavy oil from the Middle East is completely wrong.
Okay, the 2 points. It is a presidential election year. The Americans are only beginning to understand what the nature of their resource base is. And just like the Keystone Pipeline and the offshore drilling, America usually starts by banning something and then it gradually thinks forward. As the reserves become larger, my guess is the relaxation will take place and serious players are beginning to invest some money in thinking about how to deal with these facilities for LNG imports, which could be turned around for other purposes. So I'm pretty confident there'll be a degree of exporting that, but it doesn't really matter because the Canadians will export it anyway, what they would have brought forward in. That's there. When you talk about different kinds of oil, here's a distinction between specialists in industry and generalists as economists like myself. I see a world in which virtually everything is a substitute for everything else over time. Most people say, you've got light oil or heavy oil. Okay? Well, it's true in the short run. You've got refineries developed for particular purposes. But just like people think that oil is destined always to run transport. Why? At a price, at a substitution level. So I agree with you in this degree. It's going to take time. Okay? But I will hopefully be around in 2020, and hopefully we could meet again, and I predict to you the US will be exporting gas. And I predict to you the light oil, heavy oil will be a less serious technical issue then than it is today. But yes, of course, and you know, the oil prices are staggeringly high, $95. And that explains the substitutions are quite slow. It's fantastically high, okay, for what's there. But then there's a revolution or a riot or a political unrest or political difficulty in virtually every oil-producing country in the world. But in time, the price will out, would be my reaction.
Good morning. My name is Con Oran. I'm with the Canada Pension Plan. I had a question in regards to the oil indexation then of LNG contracts. What does that hold for the future, given what you've said?
Well, my answer to that is in the short term, lots of things remain oil indexed. But you have to remember how oil indexation arose. Gas and oil, in conventional terms, have pretty similar economics. You know, you have a gas field, you have an oil well, and often they're co-products anyway. Okay? So the basic idea of high upstream sunk costs, okay, and the pipeline requirement mean that it's natural that an investor shares the risk with the customer. You want us to invest in this thing, like a nuclear power station. You want us to build this thing? Fine, we'll build it. But you guarantee that you'll pay for it. That's a natural way of doing things, okay? And that's why I see long-term contracts as perfectly normal in this world, as it's constructed in natural gas and in ordinary oil. Okay? Rolling forward, the economics of shale gas are completely different from the economics of a major natural gas well. It's small cell capex, highly flexible, rig after rig after rig, flexible schedule between oil and shale oil and shale gas, time period different. The economics are different, okay? And that's what puts a bomb underneath the future of long-term indexed oil contracts. The second thing is that there was lots of oil traded, and it was natural, therefore, if you had this premium fuel called gas, to find an index to tie it to, and the most appropriate index was oil. It's out there, okay? If you roll forward 10 years' time, there's going to be all sorts of gas indexes. Who cares about the oil index? And let me give you a really radical thought. 25 years' time, oil might be indexed to gas. But that's 25, quarter of a century plus, and it's just a radical idea. But markets will develop all sorts of indexes. And LNG, well, you know, if I was sitting in Gazprom, I would have done what they did a few years ago, which is issue a press release in the morning saying shale gas is never going to happen, and a press release in the afternoon saying they bought a stake in it. I'd be uncertain.
Great.
Gulay Ulucay from Statoil, Norway. Thank you very much for a very interesting and engaging speech. A little question within the context you have described. How would this affect the development of the new emerging gas plays in East Africa with respect to the demand-supply side? Thank you.
The East African reserves are only beginning to be understood, and people are only really, many people haven't even heard of them. I find that with European politicians. These are enormous reserves. Nothing in shale gas undermines or detracts from natural gas. Okay? Natural gas is just when the shale stuff percolated out and found a big hole to fill up. Okay? And those finds off East Africa are very substantial, oil and gas, and my view is that they will just add to the plentiful supply globally. So you ask, there's two questions here. What's the price of LNG going to be? Or three questions. What's the price of shale production versus traditional production? And what happens to the global aggregate gas price, which combines both of those things together? And what's the implication for the oil price? And that needs some thinking through. But the East African discoveries are just yet another example of the lunacy of those people in the peak oil and peak gas world who think we found it all. I mean, you just couldn't make it up. You're an economist, price goes up, people do E&P. If the price is $10, people don't do E&P. Now, you get big cycles out of that effect, but what we're seeing now is the consequence of those high oil and indeed gas prices playing out around the world, plus the gradual monopolisation of the NOx and the OPEC countries around supplies. Of course, what that forces governments to do is diversify, and this is a bargain or a trade between producers and consumers. And particularly the Russians are very keen on pointing out they want security of demand as well as security of supply. They're dead right. And that search for security of demand will be part of that play.
Thanks. I could see a question. You've
I can
turned
take
into
one
a
more,
pumpkin.
but I must leave at 11, I'm sorry. So I'll take one more question.
Okay, John, go ahead.
John Roberts with Platts. Dieter, you clearly take global warming, climate change issues very seriously. Given your attitudes to gas transition, the way that we've behaved so far, your horrible examples concerning 1990 to 2005, when we actually increased rather than decreased, what do you actually think is going to happen with regard to climate change? Are you optimistic or pessimistic?
I mean, John, that's a great question. I mean, in my book, what I do is I analyse why we have failed, and I always think it's incredibly important to understand what's going wrong to work out what you should do. And, you know, if you look at the policies we've pursued, so we pursued current renewables, which are about the most expensive way known to man to perhaps reduce emissions. We pursued energy efficiency. Well, we haven't pursued energy efficiency, but on the lunatic idea that increasing energy efficiency reduces demand. In fact, for the last 200 years, quite the opposite is the case. If you increase energy efficiency, you lower the relative price of energy. Therefore, if one of my students suggested that demand would go down rather than up as a result of a cheaper energy, which is energy efficiency, they'd be quite wrong. Reducing energy demand is not going to solve the problem either. And nuclear is going to decline before it increases because of the 400 reactors around the world, 100 of them are going to come off stream anyway. 50 in Japan, although I see they've sensibly opened 2 up again, about 15 in Britain and about 15 in Germany. That's getting well along the way, and lots of the US and other reactors are up. So what you should do is first of all establish a carbon price. That carbon price should be a border carbon price, so we should pay for our carbon consumption rather than our carbon production. You should switch out of coal as fast as you possibly can. Any Greenpeace person worth their salt should tie themselves to a coal power station rather than waste their time in all the other things they do. Gas provides a way of doing this at relatively low cost and halving emissions from the coal, and in the United States side, getting emissions down pretty quickly, and you should invest everything else you've got left, which you did spend on the North Sea, on wind farms and these kind of things, on R&D. If I say to the guys in my university, how much do you need to develop artificial photosynthesis? Just give you an example. Or thin film solar. And I say to my friends, would you like £1 million grant? Gosh, that's a lot, but I think it might cost a bit more. Would you like £1 billion to do the R&D? Could you develop that for $1 billion? And they say, wow. And I say, well, we're spending $100 billion on North Sea windmills. Would you like that lot? What could you do technologically? And this is my real answer to you, John. The only way you can have any degree of optimism about climate change is if you think that human ingenuity has got a stream of technologies coming down the track which people can actually afford to pay for. And the really good news is if you look around the labs of the world, there are fantastic, exciting technologies, from thin film solar through to artificial photosynthesis, storage, batteries, all sorts of stuff. It's very exciting. And, that's where resources should go. What do I really think? No chance of stopping it at 2 degrees. But by the way, 2 degrees isn't bad. Romans got north of here because it was 2 degrees warmer, because they could actually have the agriculture to support their armies. Someone from Statoil, Norwegians and people from Scandinavia grew crops in Greenland because it was 7 degrees warmer, and they got to America. Beyond 2 degrees, bad news. And I have to say, on current projections, there isn't any hope on current projections of stopping it at 3.5. That's why the R&D effort is essential. So if you ask me if I was betting my money, I'm pessimistic. If you ask me, can this problem be solved? Yes. And it can be done in the short run at relatively low cost. It's gas instead of coal, a proper carbon price, and R&D. And if people say, all my environmental friends say, you're just a techno fix. Yeah, I am, because nothing else is going to work. Right? So you have to bet that that is the option you can pursue. Remember, the sun comes up every day. It produces more energy in 60 minutes than the entire current electricity industry in the world does in a year. There's no shortage of energy. It's a question of harnessing that supply.
Thanks very much. Thanks.